How about the supposed death of FANG? Now, I feel like throwing a brick at the TV every time I hear another FANG, obituary. I probably heard a half dozen of them yesterday. There aren't enough TVs at Costco to make it so I can do this. Let me tell you, Facebook, now Meta platforms, Amazon, Apple, Netflix, and Google now, Alphabet, are basically crusaders in the fight against inflation. They each offer something that can be used to dampen runaway price increases because they're all such bargains. Facebook's a bargain for advertisers. Amazon's a bargain for shoppers. Netflix is a bargain for anyone who wants entertainment. Google's a bargain for both shoppers and advertisers. Only Apple does not necessarily offer a bargain proposition, although when you consider how many devices the iPhone can replace, I'd say it's a steal at any price. Finally, as far as stocks being broken after weak earnings, listen to me on this, okay? I want to teach you something that I've been stressing to the Investment Club members for years. Now, all my writings are at CNBC. All of my analysis is at CNBC. This is the only place you're going to get my analysis. And you need to search for broken stocks, not broken companies. The most recent broken stock, it's the stock of a company you know well. It's the stock of Disney. Now, if you sold this thing after all the chatter about the disappointing quarter, you would have dumped it down $12. Hey, maybe you'll dump it down $5 tomorrow. I don't know. But let me ask you something. Does this really make sense to sell this iconic company? Only if you truly believe that movies, theme park, and sports are obsolete, okay? Yeah, then sell away. Sure, there are short-term problems, largely because of COVID, not because of Mickey and Minnie or the Avengers, for that matter. But these will all be worked out over time. Layer on the metaverse. Don't you want to be an Avenger? How about one being the eighth dwarf? Don't you want to swim in a pile of money next to Scrooge McDuck? I always liked him. And you could have another revenue stream. Finally, Disney's open-minded. I think gambling's a natural extension of the ESPN franchise. They got to focus on that. Club members got not one but two bulletins about why Disney should be bought here. I am urging you to be a member of my club. We are working 24/7 for you. Now, let's go back to the self-proclaimed bond experts who periodically venture into my lane, the stock lane. Rather than be constructive about what stocks thrive in a higher inflation environment, they want to write off the entire asset class. Why? Because they don't know anything more than S, ampersand, P, and then 5 and 0 and 0. Here's what they know about the S&P. They know there are 500 companies in it. That's it. Okay, not 499 or 501. S&P 500's got 500. There you go. They got horse sense. Bottom line, these inflation fear-mongers are ignorant of how the stock market actually works. They're ignorant about the way companies work. Their arguments are full of holes. So the next time they knock down the entire asset class and tell you to shut the set off and certainly sell your stocks, you should do some buying.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.